All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trade. So, quick video here today. Obviously, very choppy market action. No trades today for me. Put an overnight position on for the non-payrolls tomorrow, but very choppy market action. I was kind of anticipating this. We had Jim Bullard speaking from the St. Louis Fed. I mean, it was just a complete fuckfest. You could see I guess you'd call it market manipulation, where they kind of gap up the price so that they can run it up a little bit only for it to have to come back down. Then they gap the price down only for it to have to turn around and come back up again. So you could see this in the market. You could see this in the price action today. And Jim Bullard was just kind of all over the place. He made some kind of bearish comments, some bullish comments. He did say inflation, the inflation numbers were encouraging, to see them come down the last couple of months. And he wasn't like overly hawkish, but the guy is just a loose cannon. He's kind of Jim Bullard's kind of a clown. Like, he's kind of the fun guy at the Fed, but he's definitely not our friend when it comes to, the stock market. But yeah, so, a few things we're going to talk about. I want to talk about the non-farm payrolls tomorrow, possible outcomes, and kind of what I'm anticipating, why I put on this overnight trade. And then we'll talk about some recent comments from the IMF about recession. I also want to hit, we've got some big events coming up next week. I want to talk about that as well. And PayPal. Some big news on PayPal the last couple of days. I think PayPal's looking great. That's actually my overnight position is on PayPal. So, yeah, we talked about Bullard. We talked about the choppy market action today. Bonds were doing very well. Of course, that could turn around tomorrow, but bonds did close green. I mean, the TLT ETF closed green on the day. Nice, strong green candle. Dollar had a great day as well, and I think this was kind of hurting the markets because the DXY just continued to go up pretty much all day. So that was definitely putting some strain on the markets. And then we had some, economic information that came out today. The U.S. private companies adding more jobs and forecasts. That's not really good. I mean, this is the kind of sick financial environment that we are in right now, where good news is actually terrible. Like, good news, jobs expanding, more people getting hired, more people getting paid. This is actually bad, and it is going to negatively affect the stock market. This is why the non-farm payrolls tomorrow and the unemployment number that's in that extremely important. But I really just want to, stress how sick this whole entire economic system is when we have good numbers, we have good economic information, yet it's actually bad news. It actually negatively affects the stock market and everything else. So, the headline is Wall Street tumbles on further tightening jitters. I mean, we know what's going to happen. It's like the Fed minutes did not beat it around the bush. They're going to keep rates elevated. They're probably going to raise rates at least till they get over 5%. They'll probably do 25 basis points in February. I think it's January. It's like the end of January, January 30th. Through February 1st, I think, is the next FOMC meeting. You have natural gas futures falling to a one-year low. I mean, this is still kind of unexpected. The oil as well, crude oil under 74. We're at 73.90 right now. Let's just check in with gold and silver. Both of them down. Silver under some pressure, down 2%. Gold down about 2% as well. That's basically what happened today. Now, going into tomorrow, the non-farm payroll numbers, I've never actually tried to trade this before, so I'm kind of putting myself out there a little bit. Maybe I was feeling a little bit of FOMO because there were just no moves out there today to catch. You could have caught a move on Amazon, but I had missed it. There was a small move on PayPal, but I almost went long right at the open. Glad I didn't. But, I mean, it was just, even with the indexes, the futures or the QQQ, I don't know how you would trade it. It was just extremely choppy, basically no volatility at all. And so I figured, I would put myself out there and try a trade I've never tried before, which is the non-farm payroll number. So the non-farm payrolls, that's basically everything excluding government jobs, some nonprofit jobs and farming jobs, right? So pretty much everything else. And we get the unemployment number. There's a couple possible scenarios here. If these numbers come in good or decent or above expectations, right? So if the non-farm payroll numbers expand, if the jobs are increasing, the job market is still hot, if the unemployment is too low, not enough people are unemployed, it could be very bad for the markets, could be very bad for my trade, and especially going into next week with some of the other data that we have, the CPI, we have earnings as well. Let's hope, for the market's sake, that the unemployment numbers rise and that the non-farm payroll numbers are down or below expectations. If you're bullish on the market or if you're just, if you want to see the markets succeed, this is kind of what we need to see happen. If the non-farm payroll numbers come in, bad, like people are losing their jobs or jobs aren't being created, this is going to be good. I think the markets are going to like it. Now, you could have a situation where the non-farm payroll numbers don't really matter that much. It's all about the unemployment, right? So non-farm payroll numbers could come in maybe around expectations, maybe a little bit higher than that. But if unemployment rises significantly, that's going to be bullish for the market. All right. And it'll probably be bullish going into next week as well. So, very, very important. I've never traded it before, so we'll see how this goes. And I'll talk about my position towards the end of the video. But, I'm going to be watching these non-farm payrolls. I'm going to be watching pre-market. I'm going to be up at 4 o'clock in the morning watching pre-market. We could have sort of a melt up. Going into the non-farm payrolls, you could see like in the pre-market, the NASDAQ and the ES, you could see them rise, maybe hit like a supply area. And if the non-farm payrolls come out and they're looking really good, right, meaning that the jobs are being created, you could see the markets come right back down or come right back down at open. I think there's going to be a huge reaction regardless. So, yeah, that's the big thing. We had the private employment information today, which they added more jobs than forecasted. So that was definitely putting pressure on the markets today. But if we get a different story tomorrow, I'm really going to focus on that unemployment. I want to see that unemployment number. I don't want to see it rise because I'm an evil person and I want people to be unemployed. But for the market's sake, I want to see the unemployment numbers rise because it will mean that the Fed's interest rates are not lagging too much. The effect is not lagging too much. It'll mean that the interest rates they've already implemented, in theory, are somewhat working, if that makes sense. Okay, I'm trying to conceptualize this in a way that is going to be, just in plain English, something that any layperson can understand. I'm a layperson myself. So, yeah, you had Bullard statements today kind of indicating that interest rates are working. I guess he mentioned the lag effect a little bit, but, it could take another year or so before they're even ready to start thinking about turning this thing around. So, yeah, let's talk about the IMF real quick. All right, so the IMF came out. And they're backing the Fed 100%. Of course they are. It's all the same people. And they're saying that a third of the world's economy is going to be hit by a major recession in 2023. Now, they do claim that America is going to do okay. They don't even think America is necessarily going to drop into a recession. Jim Bullard admitted in his speech today that we did hit recession in the first couple quarters of this year, but that it wasn't technically a recession because other factors like job markets and housing prices and all kinds of weird rationale as to why we weren't in a recession after 2 quarters of negative GDP. They just changed the definition. He was also asked, by the way, if the Fed would raise their target inflation range to 3 to 4%. Somebody actually asked him this. I couldn't believe it. Because I've been thinking like, well, if the Fed can't get the inflation down, they'll to 2% or 2% over time. They'll just raise the target to 3 or 4%. But Jim Bullard explained that the Fed would lose major credibility if they did that, and it would actually, if the Fed actually does this, according to Jim Bullard, it would indicate that the Fed has no inflation target. So we're going to have to hold them to that because it still wouldn't surprise me if eventually, whether it's 6 months from now, a year from now, 2 years from now, they actually raise the target inflation rate, the inflation rate over time to 3% or 4%. But yeah, the IMF talking about a world economy going to hit recession. Europe, China mainly. The UK is just getting devastated, and they're outside of the euro, so with their currency they're basically on their own. They're being mismanaged, from a fiscal standpoint and a monetary standpoint. I mean, you could see that all this past year, the meltdown they had. So people in the UK are really struggling, and their currency can't beat the inflation rate. Not even a chance. So, and they're outside of the euros. It's just they're on their own, basically. Europe, though, according to the IMF, going to face recession. China going to face recession. But the United States is going to get off scot-free. This is according to Kristalina Georgieva, I think is how you say that. She's a Bulgarian Harvard grad, and apparently she's the head at the IMF. The IMF seems to be run by women, by the way. I thought that was kind of interesting. The main people in charge, they're all females. So hopefully they know what they're doing, right? At the International Monetary Fund. And, they're predicting the UK facing the worst recession pretty much ever. A recession is coming for most developed nations in 2023, according to the IMF. Now, if they're right and the United States doesn't suffer from a bad recession, well, what does that mean for, if all these other countries are going to be deep in recession and we see the problems already going on in the UK with the strikes and their fiscal and monetary policies, whether it's China, whether it's Europe, whether it's South America, all of these developing nations are going to be struggling. And if they feel like they don't have any opportunity in their country, where do you think they're going to want to come to? They're going to want to come to the United States. So I'm trying to, forward think about this kind of thing. And maybe I'm off here, but it seems to me that if the rest of the world goes into recession and the United States, escapes recession or almost, basically escapes major recession, it seems to me that is going to increase the issues with immigration, increase the issues at our border. And if the rest of the world drops into a recession, even if we don't, it's going to be bad for us too in one way or another, politically, if not financially and economically. So just some thoughts. If I'm off here, let me know. But that seems to be a likely outcome. If South America is down in the dumps, Europe is down in the dumps, China's down in the dumps, these people, they're going to want to travel somewhere where there is no recession and where there's, quote unquote, opportunity. It's something to think about, I think, right? Okay, so next week we have CPI, okay, that, the consumer price inflation. I always call these inflation numbers, and everybody calls them inflation numbers, but it's a price index. Inflation, I guess there's different definitions of inflation, right? Inflation is really expansion of the monetary supply, too many dollars chasing too few goods. Prices are kind of another thing. But the CPI is considered an inflation metric or an inflation indicator. We need to see that come down if the markets have any hope this first quarter. We really need to see CPI for December come down, probably below expectations. If it comes right in at expectations or even a little bit higher, again, just not going to be good going into next week. The other thing to consider is the banks. All right, we have bank earnings coming out starting next week. They might continue over into the next week. But the reason this is kind of important to at least loosely follow, even if you don't own the bank stocks, is you have to take into account the yield curve inversion. The yield curve inversion with the shorter term treasury yields being higher than the longer term yields, this negatively affects the banks. This is going to negatively affect the bank earnings, almost like definitely. So paying attention to that, because banks really weigh heavily on things like the S&P 500. So I'll definitely be looking out for that. And let's see here. Yeah, the last thing I really wanted to discuss was PayPal, because I trade it all the time. I have a small overnight position. All right, I'll admit it's not small, but it's smaller than the position I put on right before Christmas break, where I lost $3,500. PayPal got a major upgrade by Truist Financial. It's a I think it's a regional bank. They upgraded PayPal. Truist upgraded PayPal from a hold to a buy. So that was big news. I mean, that happened a couple of days ago, but this is why one of the reasons PayPal has rallied and kind of been bucking even the NASDAQ itself with some of its upward momentum this week. There's also new leadership within PayPal. They're talking about changing PayPal's name to Venmo to try to get out of maybe the stigma that PayPal is some sort of last decade, dead growth name. And so all of these factors, obviously PayPal has seen some, I wouldn't say amazing price action, but it's made like almost a $10 move this week. It was up 5%, I think, just in the last couple of days. I think the PayPal chart looks very bullish. Even now, the red candle today, it was an inside candle from yesterday's green candle, meaning that it didn't break the highs or the lows of yesterday's candle. Not only that, it did open below the close from yesterday, but it also closed above the... No, let me say that again. The closing price from today, okay? I should say the opening price first. The opening price from today was lower than yesterday's close, but today's closing price was higher than yesterday's open. So that hopefully you can imagine. I mean, just go and look at the PayPal chart, but that's what I mean when I say like an inside candle, okay? So not necessarily bullish, but not necessarily bearish either. The reason I think it's bullish, even though we have a couple of gaps, on the way up, we gapped up like twice this week. I think we could gap up a third time. I think it's possible. And I think we could at least rally right into that supply area at right around $80, because we came shy of that. I think like 78.50 or something is kind of where PayPal's been trying to sell off. It almost looked like a double top from yesterday, but I don't see a double top, especially after today's price action. You would expect if that was the double top, a little bit more of a violent move down today, and we just didn't get it. There seems to be a little bit of demand. I know when Jim Bullard started speaking, PayPal kind of popped up a little bit today above kind of where it was chopping around earlier. But and then you look at the MACD. The MACD is, it's green. It's real green. All right. I don't like the gap on the weekly chart. If you go and look at the weekly on PayPal, there's a big gap between last week and this week. But I do think it's possible PayPal is just going to continue to, especially if the non-farm payrolls come out bad, meaning that if the jobs are not being created and if unemployment is higher and more people are filing unemployment claims, this is going to be great for PayPal. It's going to be great for the market, but I think it's going to be great for PayPal. So we'll just have to wait and see. But that is what I'm holding overnight. That's kind of what I'm anticipating for tomorrow. And I hope that, kind of helps you guys understand my process a little bit more. So I'm going to leave it there. Follow me on Instagram @MillennialTrades. And as always, until next time, I'll see you on the next video.